at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates? They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that, in terms of gold holding up, it's held up in the face of positive real yield for the past 2-3 years. It's held up, or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie, with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, we've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar. And we've had massive central bank buying. Now, all of a sudden, you have ETFs moving up, and you have yields moving down. And you have a realization by the world that, all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it, sold off, meaning rates went higher, because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates? They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that in terms of the price of precious metals. That hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation. And there's an article that I just read by what's his name? Kuz Jansen, I think it is. And he was talking about how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt. And we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains, like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down very soon. I did an interview yesterday with a guy from the UK, and he said something really interesting, and I thought about it. And I just wanted to throw it out there because I think it's fascinating when you think about it. I've done these little comparisons for years. I've talked about the house price in 1960 versus today. I've talked about, back in 33, the cost of a men's suit with a $20 gold piece or a $20 gold certificate. But he said to me that in the United States, that the money printing, which is inflation, an increase in the money supply, takes, due to the Cantillon effect, it takes time for it to work its way through the system. But an increase in the money supply is what causes price inflation, by and large. And he said, that money creation in the United States has averaged roughly 7% for the last decade. Okay, that's the average. Well, the law of 70 seconds says what? You take the interest rate and divide it into 72. It tells you how long before your principal doubles. Or in this case, if inflation or money creation is running at 7%, our currency has been cut in half in value over the last 10 years. And if what he's saying is true, that is a true statement. If he's saying 7% by and large money creation, and I think what's his name, John Williams might say that's even underestimating, but let's just go with it for a moment. And so we talk about gold, and a lot of the financial advisors who will listen or talk to people who have portfolio in gold, well, why would you own that? No interest. It's a positive real yield on the 10-year Treasury right now in the 6 month, for goodness sake. They don't know what they're talking about, because not only has it outperformed the 10-year Treasury for the last 25 years, but here's a cool little experiment. You see, if this is my mug, this is an ounce of gold, even though it's an ounce of silver, and it's hanging on the bathtub, and the water drops out from under the bathtub as you pull the plug. Gold didn't go higher, the water went lower. And that's what I'm saying about the currency here. It's not that gold is going to make you wealthy. It's that it maintains your lifestyle or your standard of living. And let me paint the picture. So if indeed what he is saying is true, over the last 10 years, 7% into 72 would tell us 10.2 years, currency's been cut in half in terms of its purchasing power. Okay, if that's the case, what has gold done? Go back 10 years, gold was $1,200. What's it today? $2,660. It's gone up more than double. So it's retained its purchasing power, not by it hasn't made you wealthy. It's gone up a little bit higher than the dollar has fallen. And so that's the whole idea with buying gold and silver. When I talked about it is wealth, it's not about becoming wealthy, it is wealth. Yeah, it's outperformed a lot of investments, and it's done very well, but it's only just really kept up with the falling of the dollar. And I just want people to understand that as we talk about gold and silver, as I always talk about it, that's really where I'm coming from. And I think it's an interesting way to look at it. And you go back, look at the price of a house in 1960 versus what it is today in the number of ounces of gold. You go back to Roman times, you go back as far as you want, and it's the same thing. So anyways, I just thought it was a neat thing that it worked out almost exactly the right way over the last 10 years. It just came out that India's silver import numbers, which last year was a record year for them. The first half of the year, they imported 560 tons, which was a lot. This year, that number's up over sevenfold. They purchased 4,554 tons of silver in the first 6 months of this year. This is the acceleration. We've talked about China, the second largest producer of silver in the world, flying around and buying up doré and concentrate. Now you have India buying anything that is not nailed down. And when you go back and look, 2 years ago, we began to see a divergence, which was very unusual. And that divergence was a downward sloping ETF market and an upward sloping gold price. And that was very unusual, because normally they would follow one another. And now we're beginning, after 2 years, to see that turn up the other way. I don't think the market has yet to really understand the power of the American investor should they wake up. And it looks like they are waking up. Question remains to be seen to what degree. What degree does this happen? I don't know. Much of the information that the World Gold Council gets is fugazi, in the respect that, like, for example, China. They tried to tell us they weren't accumulating gold. They used to keep their gold numbers pegged around 1,200 tons for years and years and years, yet they produce more gold than anyone in the world. If gold is accumulated by the People's Liberation Army, it's not reported to the IMF. If it's purchased by the PBOC, it is. If it's purchased by a proxy bank on behalf of the PBOC, it's not reported to the IMF. If it's purchased directly from the refiners by the PBOC proxy banks, or in South Africa or Switzerland, it's not going to get reported to the IMF. And if gold is under 995 pure, it won't get reported to the IMF. Think of what they're doing with silver. I'm sure they're probably doing with gold too, where they're flying around and buying doré and concentrate, which is not pure. And then they are refining it at home. That's not getting reported. I mean, and they're the second largest producer of silver in the world, and they're doing this. So when we talk about their efforts to hide how much silver they're accumulating, they're doing the exact same thing with gold, as are many of these countries look at Saudi Arabia. Saudi Arabia purchases 160 metric tons and tries to hide it, but the Swiss import-export numbers caught them. Well, if they had done it through a sovereign wealth fund, well, they probably would have got away with it. Anyways, the bottom line is that I think these numbers are a good indication, but I would say massively understated.